Okay, we are live. Hey, everybody. Thanks so much for joining us today. My name is Greg Lewis, coming at you from our satellite studio down in McAllen, Texas. I'm the marketing manager for MetaStock, and this is the very first webinar of 2025. Well, it's the first one I've been involved with. I guess Jeff's been involved with a few. And today's very special guest is our very own Jeffrey Gibby, who is the sales director and manager at MetaStock. And you've probably seen him before if you've been around at all. And he's probably... I'm going to put him at number 2 as or maybe 3, maybe 2 as the leading MetaStock expert in the world, only behind our very own Len Dufresne.
Oh,
would you say I'm okay. Kelly's not here, Jeff. What do you think between you and Kelly?
Let's see. I would, in terms of expertise with the software, I definitely would say there's a lot of people better. Lynn comes to mind for sure. William for sure.
Oh,
most of the programmers for sure. You know,
okay.
But
people in the room right now, people broadcasting right now, you're definitely the number one. Absolutely. Anyway, Jeff's been with the company for many years, 25, 26, 27. He is the father of 2, and a couple of great dogs, and lives in Utah, and he likes dad jokes. Anything else I'm missing, Jeff?
No, I think that's about it.
All right, well, I will get out of the way.
You forgot the dog and the cat.
I'm sorry, a couple quick things, and Jeff, I'll let you read the disclaimer.
Yeah.
I suck at it. We really encourage you to participate and ask a lot of questions. We expect that there's a lot of MetaStock owners here because the topic today is those hidden gems found in MetaStock. So you're definitely going to want to hang around for that. And I would love for you guys to stump Jeff and ask him some questions as the leading expert of MetaStock in the room right now that he can't answer. Give him a turn. Give it a whirl.
Yeah.
All right.
If you have questions,
well, I'll let you add it.
If I can't answer it, I'm just going, I don't know. I'll find out. Let me know.
Okay. Break a leg.
All right. Very cool. Welcome, everybody. It's good to have you here. Happy New Year, since it's the very first one of the year. I hope everybody's doing well. Neil, I remember that. Neil says, Jeff got my vote. I remember when he started a couple of decades ago. Yeah, okay. Yeah, it's been a few decades. I hope you all had a good holiday season. I hope you guys were able to spend some time with your friends, your family, just kind of do those things that are important. So, as Greg said, my name is Jeff Gibby. I'll go ahead and kick off with the disclaimer and all that kind of stuff. If you use MetaStock, thank you. I assume based on the fact that we're kind of just talking about MetaStock today, most of you are MetaStock users. There's some really, really cool stuff going on in MetaStock that we just kicked off at the first of the year. And if you're a MetaStock DC customer, what I would recommend that you do at some point is actually do the upgrade that they're talking about. Let me read a legal disclaimer first, and then we'll kind of talk about why that's cool and why you should do it and all that kind of stuff. But I'm going to go ahead and get this out of the way. So let's do it. Today's demonstration is designed to instruct you on using MetaStock and accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines for interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock does not endorse the purchase of a security, nor is it paid for the promotion of a security. No information contained in the presentation should be construed as investment advice or the solicitation to buy a security. So there you go. All right, I'm gonna actually kind of scroll down a little bit here, and I'm gonna do a few things here. I'm just gonna clear out some of these questions so that if you see a question, I can see it. And it just helps me stay organized. I started to talk about kind of the changes that we've started to make with regards to MetaStock DC. And if you use MetaStock DC, they're pretty cool. Actually, let's get off of this page. I don't need to leave the legal disclaimer up for that long. If you're using MetaStock DC, the changes that they are kind of implementing right now are very, very cool. With MetaStock DC, if you were using it last year, it's a great product. Helps you scan, identify setups, all that kind of stuff. With the DC, the very first of this year, we released an update that allows you to get at the same cost you were paying before with no upgrade costs, anything like that. For DC users, you'll get streaming real-time data. So on a delayed basis. I should say, let me restate that for accuracy. You'll get streaming, not real time, delayed data. It's usually a 15 or 20-minute delay, depending on what the exchange does. You'll be able to open up your MetaStock DC application. You'll be able to see the bars, what we call dance or move around during the day. You'll be able to see what the prices are doing. If you run explorations, you'll be able to scan. Like you could go in, and again, for no additional cost, be able to scan the markets and see what it's doing right now. See if there's anything that you want to pick up, all that kind of stuff. So it's available. It's something that our support team's been very, very busy kind of helping people through a process to kind of help them upgrade it and to get that. But it's a really, really cool enhancement. We're starting to kind of stream end of day, delayed or daily delayed data. And again, because of the changes that we're making on the back end, that's no additional cost for you. It's something you can just get. So I think it's cool anyway. And the fact that it's just something that you just get, that's cooler too. So in any case, as Greg said, I'm gonna go ahead and I've said my piece there. I'm gonna go ahead and talk about, well, I'm not gonna talk about this too much. I started here at MetaStock in 1997. Just to kind of give you some background on me, for about a decade, I was a sales rep. And that means if you had questions about the software, I'd help you answer them. I'd kind of get on the phone. I'd talk to you about your trading, how you wanted to improve your trading. And I loved that. It was a lot of fun. The last 20 years or something, so I've been in charge of kind of like the partner stuff that we do, the add-ons that we bring on, had the events that we do online. We have a big event that I'm working on planning for February. I think we're up to 40 speakers right now, and I do that as well. That's been a lot of fun, and I've learned a lot kind of here at the job, and I'm very, very grateful. It's been a really cool job to work at. I totally enjoy it, and you know, it's one of those things. Just really, I myself like to trade and that kind of stuff. As you probably know, if you've been around MetaStock, it's been around since the 1980s. Things that we do with the Hidden Gem series is I just kind of go into show you some things that you may not know about the software that might be useful for you, in case you haven't seen it before. Before I do that, I do want to talk a little bit about kind of the software. If you haven't tried MetaStock before, thank you for watching the video. I hope you get some interest in it. I've got a special offer just for you towards the end of the thing. But one of the things that I do want to mention is that for 31 years in a row, MetaStock has been rated #1 in its price category by the readers of Stocks and Commodities. So let's go ahead and kind of kick off a little bit. And there are a few things that I want to show you before we talk about. This is the Haguro battleship. So I'm going to kind of talk about Haguro. It was a fun project for me. I actually did most of the coding for it. I actually did all of the coding for it. But I want to kind of show you something first. And there's really kind of 3 things that we're going to focus on today. So if you kind of want to know what those are, to kind of as a preview, the first one of which is the dynamic trading tools. The second one is going to be Haguro, and you can see the Haguro battleship right here. And then the third one is going to be the very, very first system that I ever traded my money with, and that's the Rahul Mohinder oscillator. So those are the 3 things that we're going to go through. And there's other things that I can talk about in other Hidden Gem sessions. The thing about MetaStock that I like a lot is it's a software that has a lot of stuff in it. These ones are kind of, I call it the hidden gems of MetaStock. But there's a lot of different methodologies that are kind of available and embedded and part of the software. And so it's kind of the series that we're doing here is just to kind of familiarize you with it. If you have questions as we go through, please ask them. Vincenzo, it's good to see you. Tavanda, it's good to see you. Happy New Year, I guess. Anyway, all right, so let's go ahead and get started. One of the things that we're going to kind of start here with is just, I'm going to start in MetaStock. I don't have a lot of pre-built charts that we're going to do. We're just going to kind of play around today. But what I want to show you is a function in the program that's called dynamic trading tools. Okay, and so what I'm going to do is I'm going to go ahead and open up a chart. Let's go ahead and open up NVIDIA. If you have a symbol you want to look at, let me know, because I don't like to kind of pre-pick symbols and that kind of stuff. But let's go ahead and look at NVIDIA. And what I'm going to do here, if you've got like a later version of MetaStock, this is just built into the software. And if you want to look at the same view that I'm going to look at, all you need to do is right here where you say apply template, I'm going to find the template that says dynamic trading tools. See that? I'm going to go ahead and apply that to the chart. It's going to kind of draw what I want to show you on the chart. So I've opened up NVDA. I'm going to do it with the dynamic trading tools template, and I'm just going to open up the chart. Okay. A lot of traders, this is kind of like why I like to show this. A lot of traders like to trade when stocks are breaking out above a support level or down through a resistance level or up through a trend line and all that kind of stuff. What we've done as part of the software is we've provided the ability, where did that chart go? We've provided, let me try it again. It went somewhere. Okay, maybe I just didn't open the chart. I'm not online. That's the problem. Let me go online here. That's not. Let's see if we can just go online. I might need to reboot MetaStock. So, okay, we're online.
I'm sorry, Jeff, I interrupted. You mean your software is not online? Because you are online.
Yeah. My software wasn't connected, but now it says it is. So we should
I'll get out of your way. Excuse me.
Yeah, you're fine. Thank you for the assist. Okay, now we've got it on here. We were able to pull this up. It's hard to kind of see some of the lines that are being drawn here. So what I'm going to do is, just because I want you to be able to see them a little bit better, I'm just going to kind of go in and weight them a little bit heavier. So what this is going to be useful for, a lot of times, like even the turtle traders, when they started trading, they were looking for stocks that were breaking out, and they use the Keltner channels to kind of identify those breakouts. But a very, very popular thing that people want to be able to find are stocks that are breaking up through support, or up through resistance, or down through support, maybe penetrating a trend line, all of that kind of stuff. And what we've done in MetaStock is we've created an algorithm that'll kind of look to identify where key areas of support and resistance exist and live on a chart. So I'm going to go, what I'm doing right now is just kind of making the lines a little bit bolder so you can see them a little bit better. Okay, go ahead and click on OK here. And I think that's good for what we're getting here. In total, this is going to kind of identify different support and resistance levels that exist on the chart. Here it's identifying this as a shorter term resistance level. It's not seeing a longer term resistance level right now. If it was, it would also display that on the chart as well. Here we have a shorter term support level, so you can kind of see where we kind of broke up above this support area, kind of came back and tested it for a minute, came back above it, we're testing it again. So these are just automatically drawn for you. Here you've got the support level. It will also do upward trend lines. So right here we've got a long-term upward trend line. I'm actually going to kind of zoom out to kind of see where this started, and you can kind of see this is a really long-term trend line that it's identifying on the chart for us. And it'll also do shorter-term trend lines up and down. So generally speaking, this is kind of just automatically done for you. If it identifies a place where it finds a support and resistance on the chart, it'll draw these out for you. And I think that's helpful. But what I think is more helpful, and what I really kind of like about it, is for me, I want to find stocks that have an opportunity, maybe that have broken up through support or resistance today, or maybe that have broken up through that shorter term or longer term area today. And because we can identify these areas on a chart and put them on a chart, we can also scan for them. And so that's what I'm going to do now, is I'm actually going to show you how to run that scan and kind of how to look at it, how to review it. Let's go ahead and do it. So in MetaStock, what I'm going to do is I'm going to click on the Power Console again. I'm going to go ahead and bring it back over to the screen so you can see it. And what I'm going to do is I'm just going to go to what we call Explorer, or the scanning engine. And that's right here, okay? Of course, and then I'm going to just type in here. I love how we've added the search and nav type of functionalities here, so it makes things easier to find. I'm just going to go to this. I'll start with DT for dynamic trend, okay? I'm going to go ahead and select we'll look for stocks that are breaking out of support or resistance on a longer term basis. You can also run a scan for a shorter term support and resistance area. You can look at for longer term breakouts of trend lines, or you can look at for shorter term trend lines, just depending on kind of like the scan that you run. Okay, what I'm going to do is just to kind of keep the, oh, I've got another scan selected. Let me, this is a scan I like to run all the time that we did with Steve Bigelow, but it's not the purpose of what we're talking about today. So I'm going to go ahead and just run the one exploration. So go ahead and do this. Okay. The list that I'm going to scan, you can scan anything that you want with the data that we've got. We've got data for about 300 different exchanges. So regardless of where you're at or what markets you're interested in, or whether it's Forex or Bitcoin, or, you know, you can just apply the analysis that you want. We also offer data in India, London, Singapore, Hong Kong, whatever it might be. I'm going to just do a couple of indexes here. We do have a list of, you know, the optionable stocks in the US. We've got a list of ETFs. You can pretty much scan as much as you want. But what I'm going to do is I'm going to do just a few hundred stocks. I'm going to do the S&P 500, the Dow 30, and the NASDAQ 100. And you can see I've already got those selected. We're going to go ahead and start the scan. It's going to go through and calculate all of those levels where the longer term support and resistances are, and tell us which stocks actually had a breakthrough. And here we go. It's going to run through this. Again, if you had end of day last year and you were using it, you could do a scan right now and find out stocks that had broken through yesterday. But if you've applied the update that we've provided, you can actually do it for today too if you want. So this is looking at a daily chart. That's something that we can kind of set in the parameters. If you'd rather look at an hourly chart, you can. If you'd rather look at a 5-minute chart, you can. Whatever you want. But basically, I just ran it on a daily basis. So there you go. You can go ahead and scroll up just a little bit here. And I'm just going to, this one reads a little bit different. So I'm going to go ahead and just kind of walk you through how to review this as a screen and kind of how to get to the data that you're interested in. I'm gonna take a sip of this coffee first. All right. It's oh, sorry, Greg. Yeah, I said I don't be so loud when I put things down on the table. Anyway, so right here we've got a list of about 293 companies that have broken through supported resistance in the look back period. Right here we've got a number for breakup. This is just a close price here, pretty self-explanatory. This would be the most recent price that it got, not necessarily the close if you're running it during the day. You've got the breakup, breakdown, and then when it broke, how much volume. So this up percent volume, down percent volume will tell you, okay, if you're looking at when it broke up, how much of it, the volume. If it's like 150%, it was obviously broke up stronger than normal volume. And if it was only 20%, it was kind of a weaker volume breakout. Okay, what I'm going to do is I'm going to sort based on this column. So right here we can see Royal Caribbean 566 days ago had a breakup. So that's like 2-3 years ago. I'm not going to be interested in something that broke out of broke up above resistance back then. I want to find something a little bit more in the 0 to 5 days range. And so I'm just going to scroll down to kind of see what's recently broken through the supported resistance area. Okay, so right here we've got Sempra. There's a 1. It broke out a day ago. In terms of the volume that it broke out, about 62% of the normal volume. Also yesterday on 0.5% of the volume, not very much, we had LabCorp. Also yesterday we had Amphenol with 2% of the normal volume. You can kind of get an idea of how this looks. If we look at Deere and Caterpillar, those broke up above that resistance area a couple of days ago. And let's just take a look at those, because we don't need to spend a lot of time on this. I just generally want you to kind of understand how easy it is to kind of go through and evaluate these. If we are looking for stocks that are just breaking through support and resistance in the last 5 days, instead of 600 stocks that we started with, we'd just be looking at maybe 5, maybe 10, right? Not a lot of them. So let's go ahead and take a look at maybe Caterpillar. We'll take a look at Deere, and we'll just open those two, okay? When I do that, because I had the actual template selected, when I opened up that last chart, it's gonna be available right here. we can see right here, this is where it's identifying that longer term resistance break. Here it came up, came back through, tested this lower trend line. Look at where that stopped and kind of broke a couple days ago. And we can kind of see what the price activity is. We can see if we like it. We can apply another analytics to it if we wanted to. But that it was easy to kind of come down and narrow out where that was breaking out. Just for fun, I'm having fun. We're going to look at Caterpillar. You can kind of see where it's defining this resistance area right here. It broke out above that 2 days ago on more than average volume. But we do have a little bit of shorter term support that formed right here, so you can treat that as a resistance area as well, which is kind of interesting that that's exactly where it's kind of trying to test right here. You have a bit of a trend line. So a lot of this stuff with drawing tools and things like that, kind of the challenge is where do you put your lines, where do you kind of draw them. I like the fact that this is automated. You might not always agree with where they go, but it does certainly make finding stocks that are breaking through that support and resistance area a lot easier. So there you go. Joe wants to know, how do I create a subchart under the main chart to show ADX? I'll show you. Actually, that's pretty easy. I'm going to come up here, Joe, and what I'm going to do is I'm going to just search for ADX. And now here we've got directional movement. You've got, now you might want to add more than these. I'm just going to do with directional movement ADX. You could also add ADXR in the very same way. You can also, if you're interested in DMI, that's under directional movement plus, and DMI minus would be under directional movement minus. But since I searched for ADX, it's just finding the ADX values here, okay? But the process is the same. If you want to add all of those indicators, ADX plus minus, ADXR, directional movement plus, directional, you can just set it up exactly the way you want. If I want to apply this to the chart as a subchart, easy. I'm just going to find it here on the list. We did add in 19 the ability to search your indicator lists. That's how I found it so fast. But what I'm going to do is I'm just going to drag it. If I wanted to go into its own inner window, I'm just going to kind of put it right here on the chart. And there you go. You set your time frames, and now you've got a subchart that you can kind of move around. So that's pretty easy. If I wanted to add the other ADX there, the ADXR, same thing. Just going to come in here, find it on the chart, and then I just drag it and drop it into this same window. I'll set it as 14 periods. You can color code it. Very, very easy to do. Thanks for the question, Joe. Let me know if you have more, because that was easy. All right, let's talk about something else. And this one is, we covered how to find stocks that are breaking through support and resistance. I want to talk about a project that I kind of got involved in with a friend of mine, Gary Burton in Australia. So let's talk a little bit about that. There's a little bit of a story behind this one, and I'm going to tell it. So I was down at a trade show. I think we were in Sydney a few years ago, several years ago. This was definitely way before the pandemic. It was probably at this point more than a decade ago. But we were down. We were exhibiting MetaStock at a trade show. I started with a clean chart, but could not create the subchart section. I'll walk it through again, just in case it was unclear, Joe, as soon as we get back into a chart. I'll just leave this as a question. So I was down in a trade show in Sydney, and I'm just kind of evaluating, and we were right next to a booth that had the Australian Technical Analysis Association there. And if you're in Australia, I think they're a great organization. We do a lot of work with them. They do a lot of really good education down there and all that kind of stuff. So huge endorsement from MetaStock for ATAA. Anyway, struck up a conversation with the guy in the booth next to me, and I'm like, hey, what do you do? And as part of his job, or kind of what he did with the ATAA, he said, well, I teach people how to trade. And I go, oh, that's interesting. And so I was like, what do you teach? Like, what is exactly are you teaching? And he taught a lot of things. Haguro was a small part of it. But one of the things that it was the part of it that actually caught my eye. He talked a lot about it, different technical indicators that he taught and that kind of stuff. But then he started to talk about this Haguro method. And I was like, that's really, really interesting to me. I'd like to know a little bit more about it. I'd like to see if we can code it into MetaStock, because, you know, I like the ability to automate things, the customizability of MetaStock and that kind of stuff. And so I gave him my business card and I said, hey, when you get back home, I'm still going to be probably traveling back, but will you send me kind of the information that you have on Haguro? And he's like, yeah, that sounds cool. And so what he did was he sent me kind of actually an 800-page PowerPoint, like it was huge. And a part of that, it was like the whole course that he went through, but part of that talked about the Haguro method. And I decided to go ahead and kind of design that out. And it's available as part of MetaStock. Gary was gracious enough to really help me a lot with kind of understanding the code. The Haguro method is actually a Japanese method. It was created by a guy by the name of Seiko Shimizu. And he wrote a book that was a pretty obscure title called The Japanese Book of Charts, I believe is what it was called, from memory, which at 50 isn't that great, but I believe that was what it was called. But so we basically took kind of the work of Seiko Shimizu, we put it into MetaStock, and it's available. It's called the Haguro method. I'm going to kind of talk about what it's for, kind of what it looks at, and just kind of walk you through it. Again, this is a freebie in MetaStock, one of a lot, but that's why we called it the hidden gems of MetaStock. So another part of that story too is once I got done with the coding and we kind of got it available and ready, I called a good friend of mine, a guy by the name of Dennis Peterson, the late Dennis Peterson. And he did a lot of work with this with stocks and commodities. He did a lot of reviews, and he was a good friend of mine. And I was like, hey, I've got this really cool methodology. It's called the Haguro method. I created it for MetaStock, and we're just going to give it to customers for free. And I thought you might want to look at it. And so we kind of went back and forth. We got him a version of the installer before it was available. And there was a couple of things. He not only did he like the Haguro method, he decided that he couldn't cover it in just one article. He actually wrote 2 articles. One article talked a lot about kind of the methodology behind the Haguro and how it was worded and kind of how it worked. And then the second article talked a lot just about the MetaStock add-on that I've created. And it's a free add-on. It just comes. We ship it with MetaStock these days. Back then it was a download. You could just download it from our website for free. But he liked it a lot. And one of the things that he said in the actual article was probably one of the things I took as probably the biggest compliment I've ever gotten in 30 years of working with MetaStock. And he's like, I felt when I was looking at the MetaStock code, I'm not a programmer by trade. This is probably why I felt it was such a good compliment. But he's like, he said that the code I had written for Haguro, it's all open source. You can go in and look at it, was very well thought out and well designed. And as somebody that just started a career at MetaStock as a sales guy, and is mostly just like kind of just talks a lot about MetaStock, I felt awesome about that compliment. So let's talk a little bit more about the Haguro. It's designed for looking at weekly charts. Okay, there's 3 really main things that it does. The Seiko designed when he created it is designed to help you understand what a support and resistance is on a weekly basis. It's designed to give you key turning lines, and it's designed to give you a fairly good idea of what's going to come up in the next week. So generally with the design of that Seiko did, it said that using it on a weekly was important. And then he also said that like it kind of incorporated the idea of having a 5-day week with 2 days of rest. That's one of the things that he kind of talked about when looking at weekly charts. So let's kind of go through it. There's a couple concepts that I kind of want to walk you through. And that is, Devonda, I see your question. I will get to that too. Okay, cool. All right. A midpoint. So a lot of what this has to do with, or a lot of the work that's in the Haguro has to do with the midpoint. And the midpoint is fairly simple. It's the middle part of the chart. So if I was to take the high, I add it to the close, I divide that by 2, then I have the exact middle of the range of the bar, the midpoint. It's fairly simple. But everything that Seiko did has to do with kind of how the bar traded around the midpoint. So right here, if we're looking down here, you have the open, the high, the low, and the close. And you could say that all of this happened below the midpoint. Here you had a bearish bar, but all of it happened above the midpoint. Where these bars fall, where the open and the close and the high and the low and all that kind of stuff fall, obviously the high and the low are always going to be above and below the midpoint, but where the trading happens during the midpoint is important to the labeling structure that Seiko uses in the Haguro method. Okay, and so I think the next screen I'm going to show, well, the first thing before we're kind of talk a little bit more about kind of his identification of bars is we're going to talk about the midpoint line of a chart. Okay, and I'm going to go ahead and open up a chart. We'll probably just use one of the charts we've got open already. Caterpillar will work. What I'm going to do is I'm going to apply the Ichimoku, or the Haguro. I did an Ichimoku class last night, so today we're talking about Haguro. I'm going to apply the Haguro methodology to the chart and just kind of show you the midpoint and show you why it changes and when it changes and what it means. So what I'm going to do is I'm going to go ahead and right-click on this chart. I'm going to go to Apply Template, and I'm just going to go to Haguro. Okay. I didn't have to type all of that. I'm not sure what I want. Now, Joe, just to make sure that you understand the question or kind of how to do this, you said you had trouble with creating the subchart section when you're adding an indicator. So I just want to be really, really specific about that, and then we'll get back to the kind of the demo that we're talking about. If I take that directional movement right here, it depends on where you drop it. So if I drop it here, it's going to open up right here in this window. Okay, if I drop it up here, it's going to open up in this window. But if I want it to open up a new subchart, you can point to the middle. See, like if I put it here, I want you to notice, hopefully it's coming through on the recording, that when I hover right on this section right here, what happens is you see a window that kind of appears underneath it. And that's just a subtle clue that when you drop it right there, you're going to get a new window. Okay, so if I drop it here, that little thing went away. I don't know if you can see it. Sometimes it doesn't come through in the recordings, but what you want to see is a little window underneath the drop tool. If I drop it right on that line, or at the very bottom, or at the very top, any of those places will automatically open up a subchart for you. So as long as I drop it right on this line, I'll go ahead and set the time periods. I've got a new subchart. And then you can just make it as big as you want just by dragging it around. So hopefully that's helpful for you. Hopefully it's clear. Let's talk about the Haguro midpoint a little bit more. Okay, so right here, this is the Haguro midpoint. It is set on a midpoint. When it moves right here, it moved from here to here. When it moved from here to here, it was the midpoint of the bar, but it doesn't move every bar. You'll notice that in this case, it doesn't move for several bars and doesn't move again until you get to right about here. So I want to explain how it moves or why it moves and what the line actually means, because I think it's important to understand why it's moving and kind of what it's actually looking at to kind of move. And it can go a long time before it moves. You notice it didn't move here. It did move again here, and it moved again here. Why is it moving? Glad you asked. So what it looks at, where's my PowerPoint? Okay. We set a new midpoint if the range, the difference between the high and the low, is greater this week than it was the previous week and the week before. So that's what dictates whether or not that midpoint moves. Okay, so let me kind of show you that again on the chart. We're going to come in here. The last time it didn't move this week because the range, the difference between the high and the low, was smaller than this week, and it was smaller than the week before. The last time it moved, right here, this range, the difference between the high and the low, was bigger than this week and the week before. So as long as you have significant range, significant enough to beat the previous week, I'm going to change this to a weekly chart too, because it is designed to be worked in on a weekly chart. As long as we have a significant amount of range on that bar, that midpoint will move. Okay, you can kind of see here where it moves and kind of follows the price. We treat the midpoint as just a support and resistance. So with the Haguro method, if we're crossing up above the midpoint, you can say that it's breaking out above support or down below resistance, and you can scan for that too. Okay, but we'll treat this as support and resistance, and where price is in regard to that support and resistance kind of dictates kind of how we'll look at doing the trades, or kind of like if we're looking to go long on a stock, we can use that midpoint as support and resistance. Neil reminded me I should change that to a weekly chart. I will say, for the record, Neil, I remembered to do that before I read your comment. I don't know if maybe I saw it and I subconsciously was like, oh, this is a daily chart. Maybe that's what happened though. So there you go. Okay, that's the midpoint line. That's how we treat support and resistance. We treat it as support and resistance. Kind of what happens around that midpoint line to support it. Okay, let's go ahead and kind of talk a little bit about the bar labeling. So I'm gonna go ahead, and in the work that Seiko did, he classified each line. So here you've got 1, 2, 3, 4, 5, 6, 7, 8. Here you've got 9, 10, 11, 12, 13, 14. The classification of the lines just have to do with where the open and the high and the open and the close fall in relationship for the midpoint. So the midpoint is going to occur on every line. The high is going to be above the midpoint. The low is always going to be above the midpoint. That's by definition. But we'll have a different meaning if we have a bar like this. This would kind of look more, maybe a little bit of an inverted hammer. But basically, the definition for this particular one is that it opened below the midpoint and it closed below the midpoint. That's kind of what we're looking at, right? This one would open below the midpoint and close above the midpoint. And yeah, I had to think about that for a second. This one would open, and I think you get the idea here, open above the midpoint and close above the midpoint. This just has to do with what actually kind of the relationship of the bars, so where they happen with regard to the midpoint. I think there are some exceptions, like this one you want it to close at the high, this one you want it to close at the low, or I'm sorry, to open at the low. Those also kind of fall into the definitions as well. So each of them are labeled. These are just the different combinations that can happen, and they're labeled 1 through 8. Okay. Over here, they're not the same numerically. It's 9 through 16 basically. But for me, I thought it was interesting that this is 16, because I would say that it should be 10 to match, but I didn't create the methodology. This would be the 16 bar. Okay. Each of those bars have a different meaning on a weekly forecast. And obviously, like if you get a huge bullish bar, that's very, very bullish. This 8 is one of the more bullish of the bars. This is one of the more bearish of the bars. Key bars would be the 3 and the 15. Okay. So let's kind of talk a little bit about kind of the bars. Each of those bars have a defined meaning, and we use the expert advisor to kind of draw out what that meaning is. So if I come back into the chart, I'm just going to come back to our caterpillar chart right here. You'll notice every single bar is labeled. You've got the 2, you've got a 16, you've got a 2, you've got a 16. Right now we're having a fairly bullish week on caterpillar, and it's a bar number 2. So what does that mean? I'll tell you. Let me go ahead and open up the expert commentary. To do that, I'm going to go to view expert commentary right here. There's a couple of different ways you can do it. That's an easy one. And right here, right now I'm going to come back to range, but it's saying right now the range hasn't exceeded plus or minus 7%. This means that candle meanings are less significant. Okay. What that means basically is if we're extended in range, the meanings of the chart are going to be more significant, particularly if we're looking at reversals bars. The 3 and the 15, when those are extended in range, are significant. I'm going to talk exactly how we do this. Right now, since we're not quite above, right, this is where we're calculating how much we've drifted from the last pivot high or pivot low. Right now, since we haven't crossed this red line, it's not going to be as significant as it was right here when we had this 5 and the 16. Okay. So right now we don't have a completed week, obviously, because it's Tuesday, it's Wednesday. But we would want to kind of look at this at the end of the week and see what we're getting in case, this sells off more, or, it's going to be a different bar. But if it was a closed week, right now this would be a candle 2. When this is a long line, the midpoint is set as future resistance for any declining prices. You'll notice that it is a long line, and we have set a new resistance so far already this week. So concerning line 2, this appears at the outset of a rise in the market after a fall in prices. See how it came down and it's starting to rise? and a further opening price above the midpoint in the following price movement should occur. So it's predicting, okay, we're having a very bullish week. Next week, we anticipate that it'll also be bullish, okay? Wait for the next week's price to open above the midpoint of the line. If the price closes below the midpoint of the line, close any long positions, okay? After the fourth week of an upward movement, the trade should be liquidated, okay? And here it kind of goes on to talk about the 16 classifications. That's just a slide I've showed up before, and a little bit more about the Haguro method. And there's even there is usually a graphic that showed all of those, but for some reason it's not showing up in here. But kind of gives you an idea of what it is. Now I can also come back here, and I want you to notice that some of the candles are not blue, or some of the candles are not green or red, but they're blue because the three. And all of those that are blue are the three. You'll notice that you had a 3 right here, right before prices retreated a little bit. You had a 3 right here, right before prices went up, and then you had another 3 before they went back down. So these 3 and these 15s are important. That's why we kind of colored them a little bit differently. We wanted them to stand out on the chart. Okay. If I wanted to talk a little bit about what the 3 was, I could tell you what it was. But what I'm going to do instead is actually come over to this 3 here that happened at the top of the price trend and just kind of tell you what the expert advisor says, because we wrote this when I was from kind of the documents that were here. I'll point out right now that the range of the stock has extended more than 10%. This means that the numberings are more significant. So this number 3, the fact that we're up more than 7%, and we're just measuring that point from the last time we had a pivot reversal. Basically, we're using the zigzag indicator to do this. The fact that it's happening with that, have moved more than 7% is more significant. Whereas if it was between these lines, you'd give it less credence, okay? The candle 3 is a strong warning of a reversal when found in a high price area. If when the line 3 is found at a high price area, long positions should be closed within a week. Okay. If the opening price of the following week is above the midpoint, selling is still indicated. Short positions can be held. Short positions would only be closed with the closing price above the high price. So it kind of gives you some ideas. With this, when you see this 3 on the chart, not only is it saying, hey, this is a very high likelihood of a reversal, which is, it was right in this particular case, at least for a few weeks, you should get out of any trades that are long. Okay. Now you can follow that advice if you want to or not. This is what the Haguro method is telling you. Okay. All of these candles are going to kind of be labeled. The 16 right here, we had a big 16 and kind of the start of this downtrend. It's going to kind of be labeled, identified, and defined. So I just have kind of the psychology and kind of how it helps you break things apart. Okay. I want to talk about just a couple more things. Taking a look at the time. Let me go and go to the next slide here. I want to talk a little bit about significance. So with significance, this is the part that we kind of, everything else in the work that Seiko did was very objective. Obviously, all of these lines are labeled, and the work that he did kind of defined them all, and we were able to kind of do this. For significance, we kind of came up with kind of how we would measure significance. Gary had some good ideas. We played with a lot of different ideas, but it wasn't really spelled out well. When we what we ended up on, and the reason I say that is kind of like we took some liberties to kind of determine where the significance should fall and when something should be significance. But actually, I like kind of what we came up with, and we've only changed it once. Okay. What we decided to do is, I don't know if you've played with the zigzag indicator, but if a stock moves a certain percentage, it moves. And so what we did is we said, okay, well, where was the last time a low was set by that zigzag? Let's take that value. And if we're measuring the upward move from that value, how much percent has it traveled since it bottomed out? Okay. If we're in a downtrend, we do the same thing, but we look at the high, and we say, how much have we moved from a percentage basis since it had that high? Okay. The only thing we use this is to kind of help us determine what's significant. When we initially released this as an indicator, we use the values of 5%. So these values were set at a 5%. If it had moved 5% from the high or the low, that's where we would say, okay, this you should look at as more significant. Okay, we changed that. Basically, the markets got a whole lot more volatile, especially like during the, like, you know, the Rona crisis and all that kind of stuff. Prices were more volatile. We felt more appropriate areas for that were 7%. So there you go. Anything that we're kind of coming up at a 17% or a 7%, like this 3, you would give that more credence than if it was kind of just in the middle of a trend and you hadn't moved very much from the mean. That's how we measure it. So again, that's just something that's included with MetaStock. Joe, let me know if I answered your question and you think you can do that. Subchart. If you need more help, just get in touch with us too. We'll be happy to kind of walk you through to make sure you understand. So anyway, okay. Before I move on, and we are kind of moving a little bit late on time, that's okay. I'm not in a huge hurry. Devonta wanted to know, do you know any stocks in the oil and gas sector, which are the good ones, please? Okay, so if I wanted to measure, I actually did a webinar on this, Devonta, and if you email me, I'll send it to you. But I think it'll kind of, we spent about 45 minutes on kind of looking at sector rotation, how you can do that. Good. Thank you for letting me know, Jay. Up at the tradersforum.com, I actually looked at a very common way of looking at stocks and comparing sectors to the S&P 500 and stocks to the sector to kind of see which ones are performing relatively well. And I kind of walk through kind of how to do that in MetaStock, all that kind of stuff. So if you send me an email, jeffrey.gibby@metastock.com, which I'm sure Greg is going to type in the thing. If you drop me an email, I'll look up that video and I'll send it to you because we actually spent 45 minutes on that topic, I think. So there you go. Anyway, Greg, if you don't mind, will you put my email in the chat? Because I can't. Cool. All right. One more thing. And this one I really like to talk about. So play with that. It's very, very cool. One of those things. Oh, okay. Yeah. Before I kind of move on, the more important things that are significant events, the most significant things about the Haguro, candle 3, candle 15, those are the reversal candles. There's also when a stock goes from being down below the midpoint to being up above the midpoint, that would be important. Those are the scans, those are the explorations that we wrote. So you can find any of the candle 3s, you can scan through whatever stocks you want to find the candle 3s, the candle 15s, those reversal areas, and anything that's crossing through the midpoint. Those are the 3 different scans for you. So there you go. All right. And last, but certainly not least, this is actually the very first methodology that I traded my own money with. It's called the Rahul Mohinder oscillator. Rahul is a good friend of ours. He's going to speak at the conference coming up. We have him come in and do a lot of things. And just a very, very good trader. If you're not familiar with Rahul, he talks a lot on CNBC India, CNN India. He's from India. He runs probably one of our biggest distributors in the world, one of our biggest dealerships in the world. And the main thing that he does is teach people how to trade. And he does a really good job with it. What happened, and this would be more than 20 years ago, is he was in our office. He comes in our office regularly. He's overdue for a trip. I'm going to drop him a note and let him know that he should come in. But he'll do. He was in our office, and and he's very, very successful in kind of the work that he's doing. People really like him. His sales have gone up exponentially. It's developed a large following in India. And one of the things that we were kind of blown away with was how much success Rahul has. And so when he was in the office, we were like, hey, what are you teaching? What methods do you kind of show? What do you teach people to do in India? And he kind of opened up a little bit. He showed us the Rahul Mohinder oscillator. I think it was around version 10 when he showed us this. But we liked it enough that we're like, we want to include this in every version of MetaStock. And so we bought the rights for Rahul Mohinder oscillator package from him, and it's been included. And it's been one of our most popular systems. So this might not even qualify as a hidden gem. It's not very hidden. But let's go ahead and kind of just talk a little bit about what it does. As a trader, I've used the Rahul Mohinder oscillator to do a lot of trades over the years. I've shown it on all kinds of stocks. Wherever I go, I usually go in and say, hey, give me a couple stocks, and we kind of walk through exactly how well they would have worked and kind of how the system works and all that kind of stuff. So I'm going to quickly give you the rules. It is a trend following system. And I'm sure you've heard like the trend is your friend, or rising tide lifts all boats, or those market cliches, but it follows the market. Okay. What I'm going to do here, we'll kind of just talk a little bit about why I like it and why I like to show it in particular. A lot of times when we're kind of talking about MetaStock, I just want somebody to try it. Want to do an extended trial, let people kind of get their feels for it. Because I know if you kind of dive into MetaStock, there's a good chance that you're going to be a good customer with us. And many of the customers we've had for decades at this point. Once you kind of start using MetaStock and kind of just understand, hey, it's nice to be able to find opportunities. It's nice to have this massive toolbox that helps me kind of identify trades and know what to trade and know when to get in and out. Once we get started, it's just, it's a lot easier to, it's easy once you get started. The reason I like to show RMO is because I want to focus on something that's easy, it's objective and rule-based. It's something that you can work with right out of the box. If you follow the rules and if they were taught to you well, I'm going to do my best, I promise. It employs solid money management. And I've shown it on so many different instruments. It doesn't work on all instruments. It certainly works on instruments that are trending better than instruments that aren't trending. But it's a very, very simple three-step process. And so the reason I like to show it is if you're brand new to MetaStock and you just want something that you can kind of play with while you get your head around all these other cool tools that are in the program, this is a good place to start. And for me, it was a literal starting point. Like the very first trade I placed was on RMO. And it's just a very well-loved system. So it is a trend following system. The first thing that we're going to do is we're going to identify the trend. We're going to do it in a way that's objective and that we can kind of repeat over and over again. And that's what I like about technical analysis in general, objectivity versus subjectivity. Is it going up? Well, how do we measure that? Let me tell you. You're welcome, Tavanda. Okay. Let's go in here. We'll just use the same stock. I am running a little. I think what I'll do is I'll spend about 10 minutes, maybe 15, 20 minutes on RMO, but we'll go a little bit over. So my apologies if you got somewhere to be. We do have the recording up on our YouTube channel too, and we have lots of recordings on RMO. So let's go ahead and just apply the RMO model. I'm going to go ahead and apply the template right here. What I'm going to do is I'm going to go to the RMO trade model. Okay. I'm going to do the shaded version because that's one of the things that we did. RMO's been so popular. I actually called Rahul and I'm like, hey, let's take some RMO templates that actually take advantage of the new charting engine. And it's such a cool new charting engine. Let's kind of make it look nice. And he came up with a couple of versions. I'm going to focus mostly, for the purpose of time, on the shaded model here. So I'm going to go ahead and apply that to the chart. We're still looking at Caterpillar. And what I'm going to do is just kind of walk you through exactly kind of what the rule sets say that we should do. Okay. Let's kind of take a look right here. They're very, very simple to kind of read. I'm going to actually close. There is a commentary here that kind of walks you through everything, but I'm going to kind of just walk you through RMO and kind of how to read it and kind of how the charts work. The first thing that we want to do if we're going to objectively trade the trend is we want to identify the trend. With the trend, with RMO, there's three different trends that we work with. There's what Rahul calls the primary trend. There's the intermediate trend and then the short-term trend. The primary trend is measured by this Rahul Mohinder oscillator, this green line at the top. Okay. Now you'll notice that it kind of gets big, it kind of gets small. Rahul wants you to keep it simple when you're looking at this. So if the way that you read this RMO indicator is very, very simple. If you're up above this zero line, if you're up in this area, long term the stock's been going up. and you're bullish, okay? If you're down below this, then the long term is going down and you're bearish. The rules around that are very simple as well. As you might imagine, if you're bullish, you're allowed to go long and you're not allowed to short. Okay, it's that simple. If you're bearish, you're allowed to go short, but you're not allowed to go long. Okay, so right now we're seeing kind of like a buy signal. We would ignore that until we get bullish, until we got above 0 on that line. Okay, that's it. It's very, very simple. Now I want to be specific though. Just because we go from bullish here to bearish doesn't mean we're going to go short. Okay, in this particular example we did, but there's other rules. This is rule 1. Okay, rule number 2 has to do with our shorter term trend, which Rahul calls the swing trend number 2 indicator. Okay, which is this pink shaded indicator that kind of also interplays a little bit with this blue indicator. Okay, we read the short term trend the same way. Okay. Oh, before I talk about that, I want to point out that when the RMO is down below 0, you have a trend ribbon on the chart that says RMO bearish. If it's above 0, it says bullish. And so you can also see if you're bullish or bearish by looking at those. Okay. Short-term trend is what we're going to look at as number 2. If it's up above 0, it's bullish too. Okay. If it's down below 0, it's bearish. Very, very simple. That's all you have to kind of pay attention to. Are you up above 0 or below 0 on this? We're going to call it a pink filled indicator, right? If it's down below 0, you're bearish. Now, what you want to do with rule number 1, you want it to be bullish long term to go long and bullish short term to go long. Okay, they have to match. To go short, you want it to be bearish long term and you want it to be bearish short term. Okay, if you're bullish long term and bearish short term, you have 2 options. 1, you can wait, and 2, you could run a scan and find something that's actually more bullish. Okay, but what we want to do when we're kind of looking at stuff is we want to find stuff that's bullish, not on just a long-term basis, but on a shorter-term basis is also headed up. So hopefully that makes sense for you. The other thing I want to point out is as soon as this pink indicator falls below 0, you'll notice that the candles start to get colored red. Okay, as long as it's above 0, they start to get colored blue. Okay, so you don't necessarily have to look at the indicators. If you don't, you can, if you don't want to, you just look at the color of the candle and the color of the bar, and if those match, you know that they're kind of lined up. Okay, the third rule that we're going to look at has to do with the relationship of swing trend to this pink indicator, the short-term trend and the medium-term trend. And this is where it gets a little bit different, but it's pretty easy to understand if I explain it well. Okay. Short-term trend is the pink line, the medium-term trend is the blue line. And with the blue line, we don't really care if it's above 0 or below 0. What we're looking at is the relationship between the short-term trend and the long-term trend. Okay. What we want to do is if we're shorting, we want to look for an area where the short-term trend comes down below the long-term trend. Or the short-term trend, let me restate that for accuracy. The short-term trend right here comes down below the medium-term trend. When that crosses over, that's what Rahul calls a change of force or change of direction or change of momentum. Okay. When that cross happens, you can see it very visually happens right here. Okay. This is the short term going down in momentum while the medium term trend is coming down. There's your shift of momentum. And when that happens, that's a bearish signal. Okay. Now, if I'm looking at this chart at this particular time, if we're looking at Caterpillar a month ago, we wouldn't be looking at a short position yet because we're long-term bullish and we're short-term bullish as well. We would be waiting. Okay. So right here on this day, we're still bullish long-term and bullish short-term. We wouldn't actually be looking to structure a trade until right here. Okay. Same with the long scenario. If I'm back here on Caterpillar, let's just go back a little bit in the chart here. There hasn't been a lot of range in Caterpillar, but if I'm looking at this one, let's just look at this one. If I'm looking at this as an entry point, we are bullish long-term, we're bullish short-term, and we are having that change of momentum. So that's the thing. They don't necessarily all have to happen at the same time. If we're looking at kind of this downward move on Caterpillar, we'll wait until everything matches up, and we'd be looking to structure our trade when everything matches up. Okay. Since we're looking back here, I'm just going to zoom in on this area because I want to show you how to move stops on this and kind of how it works and that kind of stuff. So I'm going to go ahead and zoom in. And the area I'm going to zoom in on is right here. Okay. Just a little bit, just so you can kind of see a little bit more about what's going on. If we'd run an exploration and this came up as a buy signal on 813, we'd come in here, we'd follow our 3 rules. Are we bullish long term? We're above 0 here. It says that RMO is bullish. Correct. We can go ahead. That's bullish long term. Are we bullish short term? Our pink line is above the 0 line, meaning it's moving up short term. Our bar is colored blue. It's moving up short term as well. Okay. And then 3, we had that change of momentum or change of force. Here's where the crossover happened. Since the short term moved above the medium term, that's a bullish shift of momentum or shift of force. Okay. That means we can structure a trade. Okay. Now, I said structure a trade because Rahul has some very specific rules about how to structure a trade. So the first thing I'm going to do, this is the bar that we're looking at, right? I'm going to go ahead and kind of delete this on the chart. I'm going to take a look at the high for this bar where we got the signal and where we're kind of structuring our trade. I'm going to look at the bar before that, okay? And I'm going to say, objectively, this bar is higher than this bar, okay? And what I'm going to do is I'm going to grab my horizontal line tool in MetaStock, and I'm just going to draw just a line right above that level. That's my buy point. If I buy Caterpillar because this exists as a trade, that's where I'm going to buy. And the reason that he wants you to buy there, the way he explains it, is he wants you just an additional confirmation that this is going to break up. Okay, then that's the additional confirmation. And using that will help. So right here, that's going to be our buy point. We have on Caterpillar, we have a buy point of 340.47. Okay. Okay. I'm just going to write that down on the chart. Okay. I also want to, because this is going to employ money management, I also want to figure out where I'm going to sell. Okay. And with Rahul, there's a couple of different ways that he teaches to do it. I'm going to kind of scroll back in the chart a little bit and zoom out just so I can kind of talk about kind of where I would put it. One of the methods that Rahul teaches, and I'd recommend you play with this to see what you like better, is you can look at the lows. I could look at the low here and look at the low before, and I could say, okay, well, that is the lower low of those 2 lows, and I'm just going to put my stop loss there. Okay. What I like to do is I like to give it a little bit more room. What I'll look for is what's called a pivot low. And in case you don't know what a pivot low, a recent support area, if you're not sure what a pivot low is, I'll tell you. It's very, very simple. I'm going to look for an area on the chart that's right before this signal. I'm going to look for the last time we had a low that was surrounded by 2 higher lows. Okay, so I've got my low here. If I have a lower on both sides, a higher low on both sides, that would be a pivot low as defined by Bill Williams. Okay, I'm going to kind of look back for where that happened, and it's right here. Okay, this would be my stop loss. Okay, now Rahul, when he teaches the class, and if you start to use this or you want to learn more about it, I'd recommend you watch the class that he teaches on our YouTube channel. You'll find it pretty easy to find. But he says to find a recent support area. The way I define that is as the most recent pivot, okay, low, the most recent pivot low, okay. And in this case, my horizontal line is on 305, okay, 306 if I round. And I'm just going to round to kind of keep things a little bit easier, but I'm going to put that number on the chart right here, okay. Now, I know when I'm going to get in on this particular chart. I also know, you know, we could gap below it and stuff like that, but I have an exit strategy, okay? Whether it's this line up here or this line down here, I've got an idea of where I want to get out, okay? I have an idea of how much risk I'm willing to take. Now, the difference between 340 and 306 is like about 40, let's call it 40 points, 34 points on a $300 stock, so 10, 12%, somewhere in that area. I have an idea of exactly kind of what my risk is when I get into the chart. Not exactly. I need to be careful about the words I use because there is always a risk of gaps, especially if you're going into earnings and stuff like that. But I know that I know right now, if I go up above 340, I'm going to buy. If I go down below 306, for any reason, I'm going to sell. I'm not trying to make this decision on the fly, okay? Which makes it more duplicatable. Have you ever been in a stock and it's siding against you and you're like, well, where do I sell? I want to make that decision as a trader before I buy. Because if I've got that kind of battle plan locked in, and I know kind of about what my risk is going to be, it becomes a lot less sexy. I'm not trying to kind of, oh, well, it's going to turn out tomorrow. I'm sure of it, right? I know where that is. So I think that's important when it comes to one of the most important things when you're trading, and that's discipline. So let's go ahead and kind of just play this out a little bit because you will move your stops as you go along. In this particular case, the very next day, we broke 340.70, so we'll buy as close to 340.70 as we can. Okay, kind of goes up a little bit. Here, we had that change of momentum. We're still bullish long-term, we're still bullish short-term, but the stock is starting to pull back a bit, which is common, right? We don't often go straight up in the market when it happens, and we're just moving at a 45-degree angle, we're happy. But most of the time it goes up a little, and it comes down, it tests a new highs. It comes up a little, down a little, up a little, down a little. So if we see this change of momentum, we'll start to look to say, does it go bearish short-term, which it does. You could use that as an exit signal if you want. For me, I'm going to kind of let it go until the stop or until everything goes bearish. If I get this shift of momentum and then it slides down to where on a medium-term basis you're bearish, you could consider to exit. I also want to see RMO go bearish. Okay. The other thing is that if you do decide to get out because both of these things are bearish, you could do that. You can always buy back in again. You have another opportunity before it goes back up to buy. But typically, I'm willing to kind of give it to this initial stop loss. Okay, and typically what you're going to have is you're going to have a little bit of a run up. It's going to pull back a little bit. It's going to run up a bit. It's going to pull back a little bit. And that's exactly what we're seeing here with this shift in momentum. Okay, so when you see the shift of momentum and you're in a long trade, pay attention. Okay, what's going to happen most of the time is it's going to kind of find a new area of support, and then it's going to start going up, which is what happens here. Right here, you kind of see another shift of momentum to the bullish side. We get bullish again. And when you are in a long trade and you see that shift of momentum, there's two things that Rahul says you can do. One that you should do, and one that you can do. Okay, the first thing, and this makes a lot of sense to me, you have to do, and you should do. Well, you don't have to do it. You can do whatever you want. But he recommends that since we've kind of come in, we've established a new support level, that is a good time to move up your stop loss. Okay. And for me, here you get the buy signal. You could place it at this low or this low. That would give you pretty close to break even stop. What I'm going to look for is that last pivot low, which would be right here. And they're easy to spot, but it's just the lowest part. As long as it has two higher lows and it's the first one, that's the one I'm going to go with. So I'm going to go ahead and kind of move my stop. And now, if Caterpillar doesn't go up, my risk is going to be less because now it's 324 is my stop loss. Okay. The other thing, the optional thing, and I don't do this, never have done it, is add to your position. You can do that if you want to. You should move your stop. Okay. Let's just kind of scroll out a little bit here. Here we had a little bit of a pullback. Here we had, again, some areas where short-term it went bearish. Right here is where we probably get out because we had that change of momentum, that change of direction, that change of force, and here everything is red. Even though the stock continued to go up after that, if we're starting to see bearishness and we're bearish short-term and long-term and all that kind of stuff, we'd immediately exit. And when that happens is right here. Okay. So in this particular thing, it's not a great trade. We got in at about 340. Let's say that we got out as soon as this went bearish, 370. It's a decent one, but that's when we'd get out. Would we get back in again? So if we were looking to go short, again, we'd be looking for it to penetrate this low here, and we wouldn't have went short because it never did. Instead, it gapped up, came back down and set up another buy signal. Would we have taken that buy signal? So far, I think we're almost to the end of this chart. We would have. So here you had the breakout. We would have probably stopped out on that on a little loss. So that's the RMO system. It's objective, it's simple. I love the way that it uses money management, and play with it. It's included with MetaStock. Jordan Fear says, why don't you use the candlestick chart instead of the bar chart? You can if you want to, Jordan. I prefer candles. So if you ever want to change something about a chart, I prefer candles. Rahul didn't, so the template was set up with bars. But if you want to change it, just double click here and you can change it to candlesticks. And personally, I prefer candlesticks. So I would say it's personal preference. That was just the way that the actual chart was constructed. Personally, whenever I'm looking at my charts, they're always going to be in candles. So there you go. Thanks for the question. All right, let's wrap up a little bit here. Those are, hopefully you learned something. I just talked through this stuff. I like to have the slides in case I forget or kind of lose track or that kind of stuff I didn't today. For those of you that have been using MetaStock, thank you. I hope you learned something today. Maybe play with these things, see if you like them. They're just included with MetaStock. If you're new to MetaStock, definitely play. I'm going to tell you how you can get started on a very cool offer, basically. Do want to remind you, 31 years in a row is how long MetaStock's been rated #1. We're so proud of that. I'm more proud of like our support statistics. I know our support team's been a little bit busy with this really cool upgrade that we've had, but they do such a great job. And it's uncommon for a company to keep more people in support than sales and marketing put together. We always have had more people. We want to make sure that if you have questions, we can get them answered for you as fast as we can. So anyway, we have two different versions of MetaStock. We've got the MetaStock Real-Time. MetaStock Real-Time is normally $265 a month plus exchange fees. It includes everything I showed you today. The MetaStock, it has the ability to do intraday charts as well as daily, weekly, monthly. It also has a really cool news platform that we call Zenith. Just to kind of give you a few quick numbers, they spent over $1 billion creating Zenith. It has news and information from 3,000 different reporters, over 300 different news bureaus. It's like getting Bloomberg. It's not Bloomberg, but it's like getting Bloomberg. Bloomberg, just as a perspective for you, if you don't know, is I think $1,800 a month. It's at least it's $1,200 to $1,800 a month. I don't remember exactly, but you get a very, very similar news service powered by Reuters News for just $265 a month, and that includes MetaStock. So the other thing, and I talked about like all the changes that we just implemented in MetaStock, daily charts. If you just want to do technical analysis, daily charts will give you the ability to do everything we did today on daily, weekly, monthly, yearly charts. It's going to give you delayed data that's updated on a streaming delay. It's usually about 15 to 20 minutes. You can run scans during the day, which is perfect for what I do anyway. And it's only $75 a month. So it includes the Zenith delayed data. It doesn't include that news package because that's a fairly premium package. You have to get the real time to get that. It is literally a feed that you'd subscribe to if you're a hedge fund or a news, but it's at a fraction of what you'd pay as a hedge fund. So in any case, $75 though will get you the delayed version with delayed stream and data. Your bars will dance around. You can see where everything's been. You can run a scan. You can find your signals during the day. That's something that we just added, just at the first of the year. And I think it just makes the offerings for no cost. I just think it makes it no additional cost. I should say additional. It just makes the competing so much more valuable. And if you have MetaStock already and you haven't done the upgrade, I'd recommend it. It won't take you very long to go through, and as soon as you do, you'll start to be able to see those stream of bars. So with MetaStock, you'll get a free white glove setup. If you have, they'll walk you through the programs, show you kind of how to use it, how the scan works. They'll give you a kind of bit of a tour, make sure you understand kind of how to use it. We'll give you access to training where you can kind of go, I want to know how RMO works. Jeff didn't do a good job of showing me. Let's watch a video and it'll kind of walk you through it, or how to run a scan, or how to do the system tester, all of the tools that are in MetaStock that have helped it be rated #1 for 31 years straight. This training covers all of them, except for some of the hidden gems. That's why we do these series. So, oh, somebody's waving at me. All right. what we're going to do is kind of an offer is we'll give you, if you buy a month, we'll give you the second and third month for free. The way that's basically, we call it an extended trial. So if you do the $74.95 package, we'll call it $75. If you do $75 a month, you'll have all of the access to that data, the RMO, the dynamic tools, all that kind of stuff. It'll just be $25 a month for the first 3 months. If it's something that's helpful for you, you're going to keep it. If it helps you find better trades, you're going to keep it. And I think it will. There's a reason it's been rated so highly for so long. So you can sign up for that by giving us a call, 800-882-3040. You go to metastock.com/sales-chat, or you can go to metastock.com/3for1. Mike says the support team is the best. Well, I'm glad you said that. And I agree with you. I'm not going to argue that point at all. Thank you, Mike. Thanks for using MetaStock as well. All right. If you've been using MetaStock for a while, I hope you learned something. If there's something you want me to cover, Greg shared my email earlier. Just drop me a message. We do sessions all the time. actually, I do a session every. We actually do. If you haven't done this yet, I'm going to we did start a forum. You can find it at thetradersforum.com. We do a technical session every week. We do an interview with a special guest speaker every week. Everything up on the Traders Forum right now is free. And there's never going to be a charge to join. There's an active community of people that are chatting. It's been a really fun project. As of this morning, we had 699 members. So if you join fast, you could be our 700th member. But go register for free at thetradersforum.com. If you haven't tried out MetaStock, give it a go. I think that's where I'm going to close it. Thank you for coming. Thanks for watching the video. Like and subscribe. It helps a great deal. I hope you had a great new year, and I look forward to another great year with you. I'll see you at the next webinar.